If you've come here to find out the 6 trades a day that we're going to be putting on our $30,000 account every day this week, you came to the right channel. If you came here to find out the 14 trades a day we're going to be putting on a $200,000 account every single day this week, you came to the right channel. What we do on this channel is Maria and I have been trading together since 2020. We manage a bunch of large funds. We believe that math makes money. We trade with our heads, not with our hearts. At the end of this video, I'm going to give you the exact trades. However, before we do that, I want to explain to you exactly what we're doing so you don't make mistakes. I can tell from the comments there's a lot of confusion out there about the shorthand that I use when I tell you about the trades. So let's very quickly go through what these trades are and how you put them on, and most importantly, how you plan the exits. So what I'm going to do is at the end, I'm going to tell you a series of numbers. So I'm going to say 1202 MEC 95%. What that means is at 1202, you're going to enter a multiple entry iron condor with a 95% stop loss. If I tell you 151 EMA 225%, that means that 151, or I'm going to tell you not 151, I'll tell you 1351. We use a military clock. 1351 is 1:51 p.m. East Coast time, people have asked. And EMA is exponential moving average. I'll explain that to you in a second. And if I say 225%, that means your stop loss is at 225%. So I might say on that one, 1351, $1.80, EMA, 225%. That means at 151, you're going to put on a $1.80 premium exponential moving average trade with a stop loss of 225%. All right, MECs, let's talk about those. In the 6 trades a day challenge, all of these MECs, multiple entry iron condors, are going to be just that, iron condors. Put credit spread, call credit spread. Each one's going to have 50 wide, so it makes it a little simpler for you. They will have different entry times and they'll have different premium amounts. When I tell you the entry time, that's pretty self-explanatory, but we use military time, East Coast military time. And then on a put credit spread, a call credit spread, I'm going to tell you the premium. That premium is referring just to the short leg, not to the spread itself. So you'll get credit for selling the short, and you'll have to pay money to buy the long. But we just look at the short for terms of the purchase price. So if I tell you a $2 MEC at 1351, you're going to sell the short for $2 or as close there to as possible on the put side, and you're also going to sell for $2 on the call side, the short call. All right. Then what you're going to do, they don't have to match, by the way. This one can be for $1.95. This one can be for $1.85 or $2.30, whatever. It just is the closest one to $2 is what you're looking for, because we know over time the math is going to balance itself out. Okay. All right. So let's go on to the next thing. You're also going to be buying a long. Where do you buy the long? You're going to go 50 on the put side. You're going to go down 50, up to 50 points. You're going to go down 5. Is it a nickel? No, it's more than a nickel. Go to the next one, next one, next one. If you get to a nickel, stop. If you don't get to a nickel and you're out 50, then you're going ahead and buy that one. Sometimes it's a quarter, especially early in the day, maybe 30 cents, 15 cents, whatever. Same thing on the call side. You're going to go up five strikes. You're going to go up $5 on the strike, say, is it a nickel or is it 50 wide? And you're just going to keep going, no, no, no. Yes, there it is for a nickel. Do that one, even if it's only 45 wide. If you go boom, 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 and it's still a dime at 50 wide, do the dime. Okay, that's how you put that on. Stop loss, very confusing. Let me make it simple for you, super simple. If I tell you it's a $2 premium, right? And I tell you that it's 95% stop loss, just add 100 to the 95, makes it 195. Take 195% times the amount of the short premium, the $2 that you sold, whatever it might be, 195% of $2, which is going to be around $2 plus $1.90, which is going to be $3.90. So your stop loss is $3.90. If it was $1 premium, the stop loss would be 95 cents, right? It would be 95 cents plus the dollar premium that you got, $1.95. You're going to do that on both the call side and on the put side, on the shorts only. Now, if your shorts get called out, what do you do with the longs? Try and sell those longs right away. A lot of times they'll be bidless, they won't be worth anything. But a lot of times, especially in the small accounts where you're only 50 wide to start off with, you can sell those for 10 cents or 25 cents. And remember, when you sell one for 10 cents, it's really 10 bucks. You sell one for 25 cents, it's really 25 bucks. You say, oh, Rob, that's not much money. That's not true. That's not true. Remember, you're doing 7 a day, right? 250 trading days a year. I can't do math, but I think it's like 1,400 trades, right? Let's suppose that only 30% of them are, well, make the math really easy. 10% of them, 140, 30% of them. What is that? 420 of them. And you can get a dime for each one. That's $4,200, okay? Last time I saw $4,200 on the floor, I jumped down and got it, and I'd be telling you about it for a year. So you want to try and sell those longs and get as much money as you can. Now, let's go to the second strategy. This is just for the $200,000 account. This is going to be, we're going to do the max. You're going to see a lot of different premiums. You're going to see a lot of different stop losses. Also, we're going to do exponential moving average. That's a pretty simple trade. It's either a put credit spread or a call credit spread. So I'm going to tell you the amount of the premium. That'll be for the short only. I'll tell you the time, military time, Daytona Beach time only, right? And then the EMA, what you do is you look at the 20-minute average versus the 40-minute average. And at the time of the trade, is the 20-minute average greater or less than the 40-minute average? That's all it is. So if the market is trending up, the 20-minute will be greater than the 40-minute. And so you're going to sell a put credit spread, because the idea is the market keeps trending, or it will trend a little bit before it rolls over. And so you'll get an advantage because you're going to be down here on the put side and you probably won't get called out. Likewise, if it's trending down, you want to sell the call, right? You sell the call and hopefully it won't come back up and get inside of where you are. So that's how you do an exponential moving average. All right, let's get down to it. We have been doing, again, we do 13 million back tests every single weekend. We know, and since 2020, we've been doing these SPX trades, not only zero DTEs. Again, 30,000 SPX trades we're going to do this year. We do a lot of them, okay? And that's just in one fund, and we have multiple funds. I don't even know the exact number that we do, but it's going to be big, and next year we'll probably even double that. So what we want to do is we want to look at the back testing, and I've given you the best results for these size accounts, the 30,000 and the 200,000. Now, it is math. So is it possible that you could lose all 6 in the 30,000? Yes, it is. Is it possible that you could lose all 14 in the 200,000? Sure. Is it probable? No, it's not probable, but it is possible. I'll tell you what's more probable, though, is the more trades you do over time, the more likely it is that your results will match our back testing. And our back testing is going to show that you're going to capture around 13% of the premium on average. So you can expect, I think in the $200,000 account, I looked at it this morning, about between $500 and $700 a day on average, right? 250 trading days, that's like 168 grand profit a year, which is around 70%. I mean, 50 to 70 is our target range for these accounts. That's what it is year after year after year if you don't make any mistakes. Look, Maria and I have made a ton of mistakes, all right? You can learn by our mistakes. We'll do videos on all our mistakes. We own them. You kind of laugh at them now, but they were big, right? They were big. We've learned a lot by making those mistakes, but we don't do that anymore. Or at least fingers crossed, we won't do that anymore. All right, let's get down to the meat of the potatoes. Drum roll, the thing you've been waiting for, here it is. 6 trades a day challenge. Remember, these are all multiple entry iron condors. These are all going to be 50 wide. These are all going to be 95% stop loss. Let's go through them. Military time, Daytona Beach time. First one, 10:01 a.m., $1.45 is the premium you want on each side for the shorts. 10:43, $1.45. 10:50, $1.45. 15:02. This one tested off the scale, triple as good as any other trade in this particular account this week. 15:02, $2 and, okay, I gave this to you wrong. Let's double check. 10:01, $1.45. 10:43, $1.45. 10:50, $1.45. 12:01, $2.25. 15:02, my super duper favorite, $2.25. Remember that 15:02 one. 15:23 for $1.45. And then the gambler special, the one I love because it's only 9 minutes ago, tests very well, not as good as 15:02, $1.45. That one performed great last week. It has since October. And I don't know if I told you, but since October, I think we're up like 130% annual rate of return, something like that. All right, the $200,000 account. This is 13, 14 trades. Here we go. 10:43, Daytona Beach, military time. 1043, $2.25, EMA, 90%. Next, 1050, $3, multiple entry iron condor, 95%. Next, 1139, $3, exponential moving average, 90%. Next, 1207, $3, multiple entry iron condor, 225%. Next, 1256, $3, multiple entry iron condor, 225%. And yes, we have another one at 1256 because 1256 is testing so good this week. $1.80, EMA, 90%. So the second 1256 is obviously at 1256, $1.80, EMA, 90%. Then 1502, remember that from the earlier one? 1502, $2.25, MEC, 95%. What do you know? Another 1502 because it tests so well, $3, MEC, 95%. Next, 1537, $2.25, EMA, $1.85%. Next, 1551, $2.25, EMA, 90%. And another gambler special at 1551, $1.80, EMA, 90%. So those are the trades. You can go back, you can play it slow. If you can't remember, no charge for these things. All we ask is in the comments below, you put the types of videos that you like. If you can help me out with Maria, she's kind of camera shy, put more Maria in there. Also, my son Tyler, he's just started his fund. He's been only doing it for 2 months. He's making 10 or 3 months. He made 10% a month. He does a bunch of these crazy meme stocks I don't know anything about. If you want more Tyler, or you want to see Tyler do a video, he's also camera shy like his mother. Put down Tyler in the comments below. At any rate, this is Rob and Maria Trading. I'm Rob Helmick. If you have any questions, we do look at all the comments, but we hope you have a great trading day.